Be the prof. I want to do a breakdown of these trades that we took on GU, and these 1, 2, 3, 4 setups are different setups. So this first setup, it's an inverse setup. So as you can see, all these are the setups that we were able to take on this one pair. This is GPP USD, and we started with an inverse setup followed by trade re-entry, and then main profile, and then lastly reversal. And what you can actually notice is that we occupy the whole price, yani we were going with what price is doing. There's no place we were leaving price. From the moment we started our first trade, we were just on it. Whatever price was doing, we were interpreting it, we are entering, we're interpreting it, we are entering, we're entering, we're entering, until where price ended the day with. So I'm going to do this breakdown, and it's going to serve the purpose for the class which we've missed for trade setups. So allow me clear my chart. I think I should just leave the names alone. And then clear every other thing. It's cleared everything. So we go into the daily chart. We remove that specific day. Allow me to remove that specific day. So we'll start our analysis from the highest time frame, which is weekly. This is GU, and as you can see on the weekly, we were bullish at this point, and our last trailing level was this level. Good. And it was invalidated where this candle closed below this. So our new trailing level was this point, and currently the direction for our weekly direction was bearish. So I want you to put that in mind, that our weekly direction is bearish. We switch to the daily. We also want to do the analysis of the daily, and remember, when you're trading a H4 profile, daily level acts as an activation level, and when you're trading H1 profile, daily level acts as a target or our drawn liquidity. So in this case, you can see that in the daily, our bias was in line with the weekly. We were bullish at this point, and our last daily trailing level was this point. Which was then invalidated, and currently our trailing stop was that point. So it means from the daily perspective, we're still bearish, just similar as weekly. So if I could put this point as our weekly target, so this is our weekly target, this is our daily target, and also our daily activation level. And then we want now to go to 4 hour, because for you to trade H1 profile, you need to mark 4 hour activation level. So remember, at this point, we are marking 2 time frames as our activation level. Daily acts as the activation level for H4 profile, and 4 hour acts as activation level for H1 profile. So looking at H4, you will notice that the bias is still bullish, because we were bearish at this point. And then price invalidated our move, and currently it's bullish. So all the other time frames are bearish, except for 4 hour, it's still bullish. Now, this trailing level on 4 hour, remember the trailing level, we have marked the trailing level to be the activation level, because we are saying if price is to continue from where it is going down to our daily target, then this trailing level on 4-hour acts as our activation levels. So it's from this point now we start observing price. We start with, so definitely sometimes you may ask which profile is always the first. It depends on which activation level is closer. So looking at this, the 4-hour activation level is the closest, followed by daily activation level. And remember, the 4-hour activation level, we are targeting the daily activation level. So with this point, we are watching price on 1 hour to see a 1 hour candle close below that. And then we trade H1 profile until this point. And we have another expectation where we're expecting a 4-hour candle to close below this point. Then we trade now a H4 profile targeting the weekly level. So you see how the setups are coming in step by step. So we'll start with the inverse. We'll start with the first one, which is H1 profile. And that setup is what I call the inverse setup. Let me tell you why I called it an inverse setup. Ideally, we are looking at 4-hour profile as our main profile. Like that is our main profile, H4 profile. But then we are saying, so if think of H4 profile is our main profile. So think of H4 profile. This is our H4 profile. And with the H4 profile, think of it as our main profile. So this is our main profile. And so when I say main profile, I mean this could be the only profile we are trading. We are not trading H1 profile, we are not trading daily profile, we are only trading H4 profile. So assuming you've mastered, because this is how I started. I started by mastering H4 profile, and then later on I came and did mastery on H1 profile. So think of H4 profile to be your main profile. Number one, the advantage of H4 profile being your main profile, it's kind of slow compared to H1, and so it will help you develop yourself and develop yourself in terms of patience, and also your skill level, your entry precision. So because there are so many things you're still adopting, you need to know how to use the MT5, you need to know how to use the tools on MT5 like the position sizer, you need also to know how to use the trading view, you need to learn how to configure the platform from your broker, also from your prop firm. There are so many things. So when you have lots of things you're learning, you don't need also a profile that kind of delivers price so quick, it might end up confusing you. So H1 profile is a scalper's profile, yes, but it needs someone who has mastered speed in terms of execution. Remember, the moment price is activated, you only have seconds to execute, and yet you have not mastered to use platforms like your laptop or what. You'll get confused. You've not known how to calculate the lot size calculator and what. So, but this one, H4 profile, the moment you have your entry activated, you have like 3 minutes of entering that trade. So it gives you some kind of preparation. 3 minutes is good for you to execute. Yeah. So anyway, we treat H4 profile as our main profile. So our main profile, we have the weekly as our highest time frame, which we've done. Our weekly bias is bearish. And then we mark our daily activation level, which in this chart, as you can see, we've marked it, and it's labeled green. So this green line represents our daily activation level. So what is the next thing that we're expecting? We're expecting that for this profile to activate, we're expecting that a 4-hour candle to expand above our daily level. Now let me remove the 4-hour activation level first so that you're able to see the idea behind the 4-hour profile, and then why the 1-hour profile. I gave it the name inverse. So we've marked the daily activation level on 4-hour profile like that. Then we go to 4 hour. We're expecting a 4-hour candle to expand below this. So the first, the second, the third. So with the third 4-hour candle, remember that we got this activation of our profile at around this is 8 to 12. Yes, so this was the moment we got our activation. Now my question is, by the time our profile, our H4 profile is activating, price has already made a significant move from this point all the way to this point. So we were asking ourselves as a team, while you are waiting for your main profile to activate, is there any other lower profile that you can take advantage of so that you are able to capture this move? This move. You are able to participate in this move. And the answer is yes. We have a lower profile that we can trade as we wait for our main profile to activate. Now I'll ask a simple question. Which profile do you have the daily level as your target? Which profile do you have the daily level as your target? And let it sink for a minute. Now, those of you who thought of H1 profile, you got it correctly. So H1 profile has the daily level as our highest time frame, and in our highest time frame we mark two things. We decide the direction of that market, and we also decide the target, where price will easily target. We normally say we target the low hanging fruits. Now, so remember now H1 profile is now coming in as a support of H4 profile. Our main profile is H4 profile, but now we are bringing in H1 profile as a support for it. It's supporting. We are saying before this move takes place for our main profile, which is H4 profile, to activate, we can participate on that move on a lower profile, which is H1 profile. So at this point, remember, we are not trading H1 profile separately, H4 profile separately. We are saying this profile has come to assist that individual who is waiting for the main profile to activate. So H1 profile then acts as a lower profile to H4, so that we are asking ourselves, is there any other lower profile that we can take advantage of that can give us this move? And we have said the answer is H4 profile. So allow me now to do this. To go back to the daily, let's analyze the daily. So we marked the daily trailing level and the daily previous candle low. We have ascertained that our price direction is bearish. So we go to 4 hour, we mark our activation levels. We had marked this point as our activation level. We said that according to 4 hour, the direction of the market in 4 hour is still bullish. So when it's bullish and the daily is saying bearish, you mark the trailing level as your activation level. Are we together? So remember, again, let me put my box here so that you know which exact part are we wanting to take advantage of. We want to take advantage of this place from price from this point to price reaching the previous daily low for it. So we want to take advantage of that point. I hope I'm clear. We want to take advantage of this point just before our main profile activates. So we then now switch to H1. We expect our 1 hour candle to close below this point, which is our 4 hour activation level. So the first, second, third, as you can see, the 3 candles did not activate. So we go to 4 hour candle, we close that price. When we go back to 4 hour, we still are having the same level remains valid. It's still our valid trailing level. Remember, this candle has not invalidated. So we go back to 1 hour. Let's see if we can get an activation. So the first candle and the first candle gave us a massive bearish move, which then activated our 1 hour profile. So what do we do from here? This specific candle that expanded, we mark that candle high, and we are saying we are marking this level, and it is called our invalidation level. Our invalidation level ideally means at any given time, price is not supposed to go above this line. Good. So then we switch to, now remember we are now hunting for H1 profile. So we've marked our profile as activated, and we have also included what? We have marked our invalidation level. Invalidation level. So that's what we've marked. Then we switch to M15, we mark our price reference points, and most of the time we say we check if this price leg will have valid trailing levels that can act as our support for price. So when you switch to M15, notice that yes, this price leg, first of all we mark the previous candle low. This will be our entry activation level, and then we mark the trailing stop, which is the last trailing level, which is this point. So we are saying this point, allow me to increase the width. Yes, and we let it be. So we are saying this point will act as price support so that it does not invalidate us. Remember, this is our invalidation level. So we are saying if this price decides to go down, and remember M15 is our narrative. Narrative is the place where we give a story. We are saying, okay, we have had our profile activated. If price is to continue going down, where shall it go down from? Remember, price is always delivering like this. It is always forming a series of lower low, lower high. Then it forms another lower low, then lower high, then lower low. So this is how price is normally delivering. So we are assuming at this point, this is the level where price has expanded. So if price is to continue going lower, where shall it go lower from? So it will retrace to a specific point here. Maybe because of this resistance upper, this is where price will be resisted, and then price goes down. I hope you get it. So therefore, we are saying if this price is to go down, then let it come at least to our reference point, and then from here, let's see now price activating and going down, targeting our daily levels. So if that is well understood, then we have marked our price reference points. Allow me to remove these ones very fast. So we've marked our price reference points, and we have had a price activation level. We then switch to our context, which is M5. We are saying one now to see how price is going to react on this level. Now, I told you we add two moving averages on our chart, which is 200 moving average and 50 EMA. This chart is not enabled on any other time frame. It's only enabled on your context time frame. So remember, this is our context time frame is M5, and our direction for price is bearish. So when you see, you can actually see that the 50 moving average has crossed over the 200 moving average. We are saying this move is actually a confirmation that our direction, our conviction of direction is correct. That's all this moving average serves. So that's all. So it has actually confirmed that what we were envisioning from the highest time frame has now activated. Look at this crossover. It shows that now price has decided to go bearish. So we go to M5, we expect an expansion either of a candle below here, either the first or the second. Remember, we have 3 5-minute candles on M15. So we expect, for high probability, we are saying the first or the second. So let me play the first one, the second one. We did not get an expansion. So what do we do from this point? We switch back to M15. Let that M15 candle close. Remember how many M15 candles do we have in a 1 hour? It's 4. So this is the first 15 minutes. Imebaki tatu. Good. So we readjust our activation line. Remember that still remains as our price reference point, so valid PRP. So we go back to M5, the first or the second. We did not get an expansion below this line or an activation, entry activation. We switch back to M15, let that M15 candle close, and then you adjust your line, your activation line, to come to that candle, because now this one is our previous candle low. So that we are done with two 15 minutes candles. That is already 30 minutes. We are remaining with the 30 minutes. So we go back to M5, the first and the first candle did activate our entry. So we say from here, we now mark this specific candle that gave us the expansion. We mark the lowest point. This will be our entry activation level. And then we also mark the trailing level. Where is our trailing level? This part. So the trailing level will act as our support. It will act as our stop loss. Let me just use another color so that we can be able to differentiate. Good. So we are saying this one will act as our place where we put our stop loss, and this other one will act as our entry, where we enter this trade, entry activation. So we switch now to our entry. Our entry time frame is minute 1. So for entry, we are saying the first, second, or the third. Our context, remember, it was the first or the second. So you need to make this the difference very clear. On your entry, you do the first, second, or the third. On your context, the first or the second candle. So remember how many 1 minute candles are there in 5 minutes? That is 5 of them. So for high probability, the first 3. So we switch to our entry. As you can see, our lines, these blue lines, fainted blue lines, this is our entry activation. This is where we'll put our stop loss. So the first, second, and the second candle activated closed below this blue line. So it's at this point we enter this trade. Our stop loss right above here. You remember where we had this noticed. And then this point is our entry. And then we are selling, we are targeting a 1:2, risk reward of 1:2. And then once you have had now this setup, remember in your mind, back in your mind, this is H1 profile. When we go back to 4 hour, because I don't want to play fast, I want to show you our expectation. We're expecting that if we get a candle, 4-hour candle closing below this daily activation level, then our main profile will have activated. So if we get a 4-hour candle closing below this point, then our main profile will have activated. So remember, that is what you are waiting for. But as you are waiting, you have taken an advantage of this H1 profile, so that you are able to participate in this move of price. So since you have entered in M1, you switch to M5 to do what? To do what we call trade management. Trade management is simply, you want to see, is my trailing levels being respected? So for now, our stop loss is where our trailing level is. So that's where our trailing level is. So I'll start playing these candles. Let's see how price is delivering. So I'll play one by one. As you can see, this becomes our new trailing level. Yes. Then this one becomes our new trailing level. Yes. You can see this one becomes our new trailing level. So as you can see, price is actually respecting our trailing levels, and it is delivering. it is delivering this price to our anticipated direction. This candle closed below this one, so this is our valid trailing level. This one closed below this, so we adjust it to this point. We keep on adjusting our trailing levels. So at this point we get our trailing level disrespected. Which point? At this point. So we either move our stop loss to break even, or we can just see if we can get another disrespect of this new trailing level and price will continue low. So we get a disrespect and now price is still going low. Yes. Good. And at that specific point, we smashed our take profit. So if you are managing this, even if you had moved at this point where you saw your trailing level being disrespected, you could just have moved your stop loss to break even, so that if it comes all the way, you are just at break even. But you see, it just disrespected it and continued going low. So let's see now our 4-hour candle. Let's go to our 4-hour. You can notice that the 4-hour candle has not closed, but did not close below, has not yet activated our main profile as we had wanted it. So this is the second point. This is the place where now we took our second trade, which we call trade re-entry. I want to show you exactly how we took that trade. So the first 4-hour closed. When you go to M5, it had not yet hit our TP. So you go back to 4-hour. If that 4-hour candle closes before it hits your TP, what you do, you now still trade H1 profile again, which we call it now second trade of the same profile. So if it is a second trade of the same profile, we call it a trade re-entry. So this is a re-entry setup. Re-entry setup means there was a first setup, either you missed it, so you are entering a second time. So this is a re-entry. So we have adjusted our H4 activation level. Remember, this was our trailing level on H4, which we used it as our activation level, and we got this move. Now, H4 candle has closed. This is our new trailing level, the previous candle low. Remember, now we have invalidated this previous trailing level, and the bias of H4 has now aligned with the daily. We are now bearish. So you go back to H1. Let's see if H1 activates. So so it did activate at the same time hitting our take profit for the first trade. Good. So because I just wanted to adjust it so that we can mark this specific candle, we mark this specific candle low. Again, you know, I'm marking this as our invalidation level. So ideally, remember, we are waiting for our 4-hour candle to close below our daily level. So before that happens, we could take advantage of this move by trading a lower profile, which is a H1 profile, and we are calling that profile now inverse setup. So every time I say we are trading inverse setup, is because the first setup before your main profile is always an inverse setup. So the lineup of our setups is like this. So the lineup of our setups are just like this. So we start our setups by hunting for an inverse setup, and an inverse setup is always H1 profile. Sometimes we may not get an inverse setup, but the same we can get a third candle expansion, and I'll show you in another video how to get a third candle expansion. I think was it Euro USD? that gave us a third candle expansion. I'll check if it is there. Then I'll show you this setup, third candle expansion, how we come about it. So this is also a H1 profile. Then we have the main profile, of course, which I've said is H4 profile. And then anytime our H4 profile doesn't play out, it reverses on us, price reverses on us. It means the algorithm has changed from delivering price on H4 profile. It has switched back to the lower profile, which is now H1 profile. And then lastly, sometimes you do hunt your main profile setup for 4 hours and you do not get a setup. That means the algorithm has now changed the price delivery from H4 profile, and now the question is, which profile is higher than H4? And the answer is daily profile. So you see, if you've mastered H4 profile, it means there's a way you can navigate back to H1 profile, and there's a way you can navigate front towards daily profile. So if you hunt your setups on H4 profile and you miss it, then you can use continuation setup, which is the daily profile. If it reverses on you, then you know if it reverses, you switch back to H1 profile. Umeona? And before it activates, you use H1 profile to capture that expansion. The first name we would have given it expansion setup. But one of my friends told me it twists your mind, so call it an inverse setup. So we gave it an inverse setup. So we have inverse setup, we have the third candle expansion, both of them are H1 profile, and then we have the main profile, then we have reversal setup, and then we have continuation setup. So we go back to our chart. So this is trade re-entry. Re-entry inamaanisha 4 hour ya kwanza haiku expand below our anticipated daily. So we want to take advantage of the second 4 hour candle, having this in mind that either any 4 hour candle would have activated our profiles. So maybe the second one will activate, hatujui. So we just mark the trailing level, which is the previous candle low. We go to 1 hour, and the first 1 hour candle activated our profile. So we trade this profile before the 4 hour candle ifunge. So we go to we marked our invalidation level. We go to M15. We mark our price reference point. So you remember we mark this is our trailing level on M15. Let me give it, and also we mark the previous candle low as our entry activation level. Good. That point. So let me give this a bit of yes, to act as support. So we are saying if price is to continue lower, where shall it go lower from? We are saying it comes at least, is it to invalidate uko juu? It comes to our price reference point, and then from that point we're expecting now price to drop. You remember how price is delivering. It gives us a series of lower lows and lower highs. So if it is a downtrend, we are having this lower low, then lower high, then lower low. So we are at this expansion now. Price has expanded. It has given us this lower low. So if price is to continue going lower, where shall it go lower from? So ideally it will come back to a price reference point here, and in this case we are saying our trailing level should act as our price support. So it should come to somewhere here, and then from there we get a drop of price. I hope that price delivery is understood, what we are anticipating and what we want to see price doing. So we've marked our price reference points on M15. What is the next thing? Is to go back to M5. So you're expecting either the first or the second. I hope our template is there. H1 profile. Good. So we are in our context, either the first or the second. So the first or the second. Now I'll zoom out because sometimes you need to be very keen. And as you can see, the second candle actually closed below our line. So it's at this point where we mark our last trailing level. Where is our last trailing level? Because that will act as stop loss. And then the previous candle low. So let me just mark the previous candle low will act as our entry level. Let me use a faint blue. Good. And then our trailing stop will act as our stop loss. Where is our trailing stop? This point. Good. Hope you can see that this candle did not cross below this. Otherwise, if it had done, then this one would be our trailing stop. So anyway, this now is our trailing level. So this will be our stop loss. This is our entry activation level. So we switch to 1 minute for our entries. So the first, second, or the third. You know that our entry is the first, second, or the third. So the first and the first candle activated. So we enter this trade. Our stop loss right there. Our entry is here. We are selling this market. I love risking 1:2.7. Sometimes 1:2 is also good. May love 1:1 to 7, but 1:2 is good also. So we play this trade. Let's see how price delivered. Good. So we trade manage this trade on M5. So let me remove all these lines. I want us to trade manage this trade together. Good. So remember, we are marking trailing levels to see how price is respecting. So I'll just play. Let's see how price delivered with this trade. I know now you know how to mark the trailing levels to see is our trailing levels being respected, our trailing levels being holding price. Yeah. So let's see. This video is already quite long, so let me not explain it step by step how you do trade management. You can just see from the previous trade how we did trade management and how our price delivered all the way to take profit. Boom. So right here we smashed our take profit. But now I'll go back to 4 hour. Let's see, was our objective met? And as you can see, a 4 hour candle closed below a daily candle, thus activating our main profile, which is H4 profile. So I want us to see, could we have had another setup as from this point? So I'll just mark this specific 4 hour candle that gave us an expansion. This now becomes our invalidation level. Remember, now we are trading H4 profile, or our main profile. So our main profile was, we established from the weekly that our direction was bearish. We marked our daily activation levels, and now we were expecting a 4 hour candle to activate. And as you can see, we are in H4. A 4 hour candle actually closed below our daily activation level, thus activating our main profile. So how do we go about it? We mark our invalidation level, and then we switch to 1 hour and mark the price reference point. So we switch to 1 hour. Let me remove these other marks for the other profile. So this is 1 hour. So we mark the previous candle low. We mark it with blue. No. Good. So we mark the previous candle low, and also we mark the trailing level. So our trailing level is at this point. So let me enhance it a bit so that it acts as price support. So we are saying this is our invalidation level for H4 profile, and this is our price reference point that acts as support. Ideally, we want to see if price is to continue going lower. Remember, now we are targeting this level, this weekly level. So if price is to come to this point, then we are saying if price is to continue lower, then let it come back to our reference point. that will act as support isiende mpaka it will invalidate just around here, and then we see this expansion and we take advantage of this move. So I've marked my 1 hour activation level, not activation level, price reference point. We go to M15. So with M15, we're expecting its context. So it's expecting either the first or the second. And then our entry is M3, so the first, second, or the third. I hope you're seeing it. So M15, the first or the second, we did not get an expansion. Let me zoom it out. So switch back to 1 hour, let that candle close, adjust your line. This now becomes a previous candle low. How many 1 hour candles are there in 4 hours? These are 4. So remember, we have now 4 hours of trade hunt. And in H1 profile, you only have 1 hour of trade hunt. Why? Because it is 15 minutes. How many 15 minutes do we have in 1 hour? 4 15 minutes. But this one now we are talking, how many 1 hour candles are there in 4 hours? There are 4. So 4 hours of trade hunt on the main profile. So we switch back to M15, the first, and we got an expansion. So we mark our trailing level, which is this point. I'll use a faint purple. Purple is good here. And our previous candle low. And this is the point we enter this trade at M3. So we switch to M3, the first, second, or the third. So the first, and we got a massive bearish engulfing. So we enter this trade at this point, our stop loss right here. Our entry here. And we are targeting, we are selling risk reward of 1:2. Good, like that. So this is our third setup. Remember, we have taken the first setup, 1, second setup, 1. So this is a third setup, and now this is actually our main setup. If you didn't know how to trade H1 profile, this now could be your first trade for the day. So let's see. So this is our setup, main setup, and because your entry is M3, you trade manage it on M15, the previous time frame. So we switch back to M15, we want to trade manage it. During trade managing, we want to see, is our trading levels being respected or is it being disrespected? Now, I'll remove all the lines so that we are clear which levels are we watching. So let me just use this blue line. Our last trailing level was this point, yes, where we've put our stop loss. Now, anytime your trailing level is disrespected, that is the point we activate reversal setup. Reversal means price did not go to your anticipated direction. Remember, our target is a previous weekly level, and you can see this point is our weekly level. This is the point where we are saying this price, let it target this point. But what if price just decides we are not coming anymore to this point and it decides to reverse on you? Then it will show you by disrespecting your trailing levels. So the moment price reverses on you, you know. The moment it disrespects your trailing level, you know it has started reversing on you. My God, good. So we switch back to M15 to manage this trade. So I'll just play one by one. So that is it. So we had a new trailing level. So we adjust this line to this point. So price currently is delivering the way we want. Let's see. At this point, we did not actually disrespect, but we swept. So this is the point where we normally say it's 50-50. So you just wait to see if we get another candle, let's say a candle that disrespects completely with a body close, then we can say at that point that we have disrespected our trailing level. So the next candle, and at that point, so sad to say that your trailing level was highly disrespected. So it seems that price doesn't want to continue anymore to our target or our initial target where we were targeting the previous weekly low. price has just decided we are going back. So in this point, is this point where now you activate another setup called a reversal setup. So remember, we took advantage of the expansion using H1 profile. But now that it's reversing on our main profile, we switch back to our lower profile, which is H1 profile. So at this point, because we are already on M15 on our H1 profile, M15 acts as our narrative. So we switch to we just mark that candle, and then we go to M5. We are saying the first or the second. So the first one activated. So we mark that candle that gave us an expansion, both high and low, which is our trailing level. So we are saying this will be our stop loss, and this will be our entry activation level. We are now reversing. This model is being reversed. So we will enter here our reversal model, and this will be our stop loss. So we switch to minute 1, the first, second, or the third. So the first, second. Now I want to show you something because I'm using my replay tool with a different broker. This is JForex. This second candle on my real account, which is my broker on TradingView. The second candle on TradingView did activate. You can see the second one closed above with a body close. But when you see the JForex one, the second candle did not close above, which I know that is how the brokers manipulate the charts anyway. So this is the point where we enter this trade. So we enter this trade at this point, our stop loss right here. And then our risk reward 1:2. We are buying, definitely. And then now we want to trade manage this. So this is H1 profile. Our entry is minute 1, so we trade manage it on minute 5. So we want to see, is our trailing levels being respected as price is delivering all the way to our take profit. So let's play. Let me remove all these lines so that it's clear what we are watching is the trailing levels. So our current trailing level is this point. Let me just get this line. Yes. So that we will keep adjusting it as price is delivering. So I'll play. Let's see how price is delivering. And remember now, this is our reversal model. So price did not go to our intended direction, but now it is reversing on us. And now we have taken advantage of this move, and price is now going, we are now trading a reverse of our main profile. So this is called a reversal setup. Good. I think this was something like Trump speaking or what, and it just caused a spike, and it took us to our take profit. So you can see how we were so busy managing this trend from morning. This was around 5:30 in the morning all the way to 5:40 in the evening. Now if this was your prop farm account, then the first 2 trades were already a boom for you. You would have passed your challenge. Maybe you would have failed at this point, and then you would have recovered this loss by this win. That's how we do now. We employ risk management and all the other things. So I hope it has been well detailed. I wanted to show you the third candle expansion. Allow me to just check EURUSD. If EURUSD was the setup that I saw with the third candle expansion. If it's that, then we can go on it. Good. I've been able to locate the specific day where we traded a third candle expansion on EURUSD. So this is our daily chart. Because third candle expansion is a H1 profile, I'll just show you how we go about it. So we start from the daily. So when we do the bias for the daily, it was a little bit tricky here to get the bias or the direction of the daily. But as we can start from this point, you see we were bearish. And this red candle also closed below this. So this was our last trailing level on the daily. Only for it to be invalidated and the price went bullish, and we had this day also closing bullish, so we had this as our bullish trailing level. Then price came down, invalidated our bullish, and now at this point we were bearish. We had this as our daily trailing level, which, as you can see, we have also disrespected it, and now price has switched direction. We are now bullish. So coming to this day now, this is our trailing level, and then we mark where price is going to target the previous candle high. So we are bullish. So coming to this day, we mark 4-hour activation levels. So when you go to 4-hour and look at the direction of 4-hour, you can notice that this was our last trailing level on 4-hour, which was bearish, and then we switched to bullish. So 4-hour was also bullish, like the daily. So you see this same level is our 4-hour activation level. So daily is bullish, 4-hour is bullish. Then we go, so this is our 4-hour activation level. So we go to 1 hour, we expect our profile to activate. And most of the time, we are saying for profile to activate, we expect either the first or the second 1 hour candle. Of course, we have 4 1-hour candles, but for high probability, we normally use the first or the second. The third one, mostly we don't, because though I had already told you previously that the first, second, or the third, but the third one inakwanga mid probability, medium probability. It's not high, it's not low. So normally I prefer the first or the second. So I play the first candle, the first 1 hour, it did not activate our profile. The second 1 hour, it did not activate our profile. Now, this is the point where we are going for the third candle. Now, let me tell you something about Forex trading. Forex trading, we normally use the word fractal. We say price is fractal. Fractal is comprised of 3 candles. The first, second, third. The first 2 candles normally determine the direction of the market. But the third candle is always an expansion candle. You will do your research. The third candle, if it's first quarter of the year, which is January, February, March, the third candle, the March candle, is always an expansion candle. Either way, it's always an expansion candle. So the third candle is always an expansion. So we are saying, because we have an anticipation of our 1 hour candle to close above this point, yet the first 2 have not activated our profile, the third one could be the expansion candle that we are waiting for. So can we trade that expansion candle? Yes. So we just see the only way we can trade this expansion candle is if we can only trade that third candle expansion if we only see one thing. If we see our bias aligning. Let me just write it here. So if we have our direction aligning from all our time frame, that is from the daily, 4-hour, H1. If all these time frames are aligning in terms of direction, daily is saying bullish, H4 is saying bullish, 1 hour is also saying bullish. then it means that we have more conviction on our direction that the third candle will actually expand bullish as the rest of the time frames. So when you switch to daily, remember our daily we had already turned bullish. When we switch to 4 hour, we had already marked our previous 4 hour high because the trailing levels of H4 is bullish. So when we switch to 1 hour, I want us to see if 1 hour is also bullish. And you can see that our last 1 hour trailing level was this point, which has now activated to this point because this 1 hour candle, the previous 1 hour candle has closed above this. So even our 1 hour is also bullish. So we just go to M15, mark our price reference points and entry activation. So price reference point, we have this point. And then our entry activation is previous candle high. Go to M5, the first or the second, the first or the second, we got an activation on the second candle. So we mark the trailing stop on M5, which is this point. Let me use faint blue. And previous candle high. Yes, like that. Then we switch to our entry time frame, which is M1. So this one will act as a stop loss, this one will act as our entry. But remember, we are expecting this third candle to be an expansion candle above our 4 hour so that it activates our profile. So we switch to M1. I know you will have a lot of questions for this, but I'm ready. I'm ready. You know, these things you will understand it the more you do the practice. So the first candle gave you an expansion. You enter that trade. You stop loss right there. You're buying, so 1:2. And we switch back to 1, and let me show you now. Ideally, we said we were expecting our profile to activate the first, second, or the third 1 hour. But the first two did not expand. So we are saying the third one is always an expansion candle. So let's see if this third one got our profile activated. Let me just play 1 hour. Pop. You see the third candle activated. So when you switch to M5, you'll notice that on the other hand, that move we were able to capture it and we were able to smash the take profit. So ideally the third candle expansion is the third candle of our H1 profile. So when you are marking your 4 hour activation level, you are waiting for any 1 hour candle to activate. But then if the first two does not activate, normally the third one, if every bias is in line, daily is in line with the 4 hour, with 1 hour, all of them imekuwa aligned, then it means the third candle is always an expansion candle. So BD Prof, it has been a minute doing this long video. I hope you understand. I'm expecting a lot of questions. Please refer. You can go back to this video over and over. And I hope my audio was captured clear. See you in the next video. BD Prof signing out for WorkSec.